Hi, everyone. I'm Scott Cody with Latitude Financial Group, and I'm here today with my business partner, Dan Grow.
Very good, Scott. I think to start, let's get a little bit of background on our clients here today. To start with, the clients that we're working with are Jack and Shirley client. Both of them are 55 years old. They plan to retire at age 65 and enjoy a 35-year retirement. In other words, we have life expectancy for Jack and Shirley set at age 100. From a net worth perspective, total net worth sits at about rounding 2.3 million. So with that said, I'm going to go ahead and take a look at that status quo scenario of how they are projecting toward retirement. This is without the impact of any long-term care in the scenario, either purchasing insurance protection or having any type of a health event in the future. So what we can see here as a summary is they're sitting in pretty good shape. Probability of success of 90%. Of course, this is kind of a best case scenario here that first of all is in the green, meaning that in really three different market scenarios, they're in a pretty good state, good condition. So with that being said, let's take a look at our first what if scenario. And I think for this first scenario, let's take a look at what would the picture look like if Jack were to experience a health event. So if Jack experiences this health event, again, the need being health aid, we're using the projected costs based on current Colorado averages for that cost. That takes our probability of success down from what we saw previously was 90% down to an 83% probability of success. What if it is Shirley that needs the long-term care assistance? And maybe a little more of a dramatic scenario if she were to have a cognitive impairment, like an Alzheimer's or dementia. The scenario is if Shirley needs that from her age 80 to age 90, as those types of conditions certainly can be more persistent. So let's flip that to what if it is Shirley that needs the care, and how does that impact our probabilities under that set of circumstances? So as we see, the probability of success takes a pretty steep dive down to 63%, down from the base case was 90% probability of success. We still see positive assets remaining at the end of the plan in the above average market outlook of a little over 11 million. In an average market outlook, we have portfolio assets remaining of just under 3 million. But in the below average market outlook, we're actually in the negative. Jack and Shirley are in the negative. That looks like about negative 2 million, a little over 2 million to the negative in that scenario. So certainly not optimal. What if in the base case scenario, what if they buy a traditional long-term care policy, but don't end up using that policy? Neither of them experience a health event. In this scenario, again, Jack and Shirley living a long and healthy life to age 100, buying long-term care insurance, but not using it, takes their probability of success from 90% which was our base case, down to 88%. So it's not that there is no impact there, because there is, but they're still in a positive scenario as far as assets remaining at the end of the plan of just under 16 million in an above average market scenario. The average market scenario, 7.7 million approximately, and the below average market scenario of 2.3 million positive. And this is, again, in the event that they don't need the policy, but they buy it for peace of mind sake. Anything to add there, Scott?
No, that's great.
So now let's take a look at how does this change the outlook if, in fact, Shirley does have the health event. Remember, without the protection in place, the probability of success was 63%. So what we see here with this traditional long-term care insurance policy is our probability of success does increase 4 percentage points to 67% in this scenario. Well, then what I think would make the most sense next would be to take a look at an alternative policy structure in the event that it is Shirley that needs care. These policies, of course, Jack's is assumed not to have been used, but would still have had the cost. Shirley's is used. Probability of success is now 68%. That's up from the 67% with the traditional long-term care. And again, without insurance in this scenario, that was a 63% probability of success. So it would appear that the hybrid life insurance 10-pay structure does a better job of protecting Jack and Shirley financially. Anything to add to that, Scott?
Yeah, I mean, I think, when we get into discussion with clients on, looking at this type of, potential future cost health event, I think it's worth noting that with why so many clients opt for a hybrid policy is because it kind of covers all the scenarios that could potentially play out for folks. And those scenarios would be, what if I decide, I don't want it, or I need access to the dollars? Well, with a hybrid policy, you have equity or cash value in it that you could surrender the policy for. Or, what if I never need it? It'll pay out in the form of a death benefit to your estate or named beneficiary. And so I think from that standpoint, that's why, on this specific topic, that's why these are pretty favorable in those discussions with folks, these hybrid type of policies.
Well, I think unless you have something else to add to that, let's take a look at a third scenario, a third approach that may be applicable to some people in our audience here. And that is, what about a single pay life insurance approach that allows a person to utilize a policy that maybe they've had for years and years that they've been paying on, and that's accumulated cash value over a long period of time? What that looks like, we see their probability of success increase to a 70% probability of success in this scenario. That's up from 63% without any protection at all. And while a 70% probability of success may not be what they're aiming for, there's certainly conversation that could be had, behind the scenes about the possibility of purchasing additional protection. This approach was just using the money that they already had inside their existing life insurance. So no new outlay of cash to get their probability of success to this level. I don't know, Scott, anything else that you would add to this?
Yeah, I mean, I think it's worth noting, with a single premium hybrid policy, and this ability to take an existing asset, in this case, Jack and Shirley's existing cash value or permanent forms of life insurance, and just speak for a moment briefly that, I think there's merit in owning permanent life insurance or purchasing it when you're young, when you're just starting a family, despite popular, I'm going to say, financial personalities that would generally argue against it. That permanent or cash value form of life insurance can play a dual role. In earlier years or younger years, it can play that life insurance, pure life insurance role. And then now, or in your later golden years, as they call it, it can now play that hybrid life insurance, long-term care insurance policy without, necessarily have to expend or come up with, additional monies.
Excellent. Very, very true. We have, gone through a number of scenarios here today. Scott, if anybody watching this video feels like they could use a little bit of advice or help, how would they reach us?
Yeah. By email, it'd be info@latitudefinancialgroup.com. You can find us at our YouTube channel, so Latitude Financial Group, and YouTube, or certainly by phone, 720-881. I'm at 8742, and Dan, you're at
8744. So 720-881-8742 for Scott, 720-881-8744 for me. And of course, on the web, www.latitudefinancialgroup.com. Any last comments, parting thoughts here, Scott?
Nope. I'm good.
Okay, great. Well, I hope that you'll take the time to share this video with anybody that you think it may be appropriate for. Like the video, we really appreciate that. And if there is anything that we can help with, we do offer that complimentary 1-hour consultation to talk through your circumstances that are unique to you. And we're not stingy with our time. We want to make sure in that consultation that we answer as many of your own questions that you may have. So thank you very much for joining us today, and let us know how we can help.